The top line on your numbers, it's simple. It's clear-cut, more operating profit, more capital, more cash, more dividends, and there's more to come. How much more to come? You're committing to this 50% payout ratio by the end of 2017, Mark. So are you now a fully paid-up dividend stock committed to your shareholders?
Well, I think we're committed to our shareholders, Manus. That much is sure. There's more to come in a whole lot of range. There's more to come in all the operating units. I expect more each year. I think the other big news, and you've described it well, but the other big news is about our overall financial position. Our balance sheet is transformed. We have this really high-quality problem of having too much capital. So we're going to invest in our business. We're saying today we're going to give some of that back to our shareholders in 2017, and we're going to pay down some pretty expensive hybrid debt this year as well. And so we'll see what investors say about that.
You say more to come on those fronts. Good morning to you, Mark. It's Anna. You say more to come on those fronts. What about the M&A front then, Mark? You've, of course, done a busy deal. You've done a big deal, busy integrating Friends Life. Finished with that? Ready for any more?
And with what I'm saying on M&A is, I know we're in a strong capital position. We might do some tactical bolt-ons. We did a good one last year with RBC, their insurance operation in Canada, and that really has been a very accretive deal. We're not looking at any jumbo deals. We don't need it. We're getting organic growth across the board. You know, we had our best year in general insurance for about 11 years. The life insurance business, particularly here in the UK, did well. The asset management, we've had some of the best fund flows in the market, and that was a breakout year. It's been a tough few years. In the last 12 months, we've had some excellent fund flows, some 30% profit growth. So we've got some parts of the business that are starting to go with all the arrows in the right direction.
Mark, I just want to pick you up on the fund management part. There's a lovely line in your notes, and this is where I want to get your opinion. You've got Aberdeen, you've got Standard Life Aberdeen, you've got NN Delta Lloyd. Your fund management business, a breakout year, strong and positive net flows. Do you want to build that organically, or would you be in the market for an asset management purchase? Are you tempted at all by what's going on in the consolidation story on that side of the business?
No, I think it's fair to say we're not tempted. That wouldn't make any compelling financial logic for us, and I won't comment on any of our competitors. But we're growing it organically. We've got a great team there. We've rebuilt it over 4 years, and it's taken a lot of hard work. The consultants are looking favourably at it. And I think if you just have a look at the fund flows market, I think we've bucked the Brexit blues there in some ways, and we're getting some nice fund flows in there.
We'll return to the subject of Brexit in a moment, but I just want to get technical, if I could, for this next question, Mark. Talk about the Ogden rate, this key compensation rate. Authorities cutting that discount rate used to calculate payouts for personal injury claims. Give us your thoughts, how that affects your business. Is there room to negotiate that a little bit? Does it change in 2017?
Yeah, well, I think that policy making was a little bit rushed and disjointed, to be fair. And we're the only country I can find in the world that has a negative discount rate in that form. It just doesn't make any sense. But I applaud the government. They've realised it needs change. They realise the methodology is wrong. They're consulting widely. We need to make sure that claimants get the right amount. But all this does is penalise young drivers and old drivers, and that's not good. So I think what's going to happen, I think common sense will prevail. The only question is when, and I'm hoping it's going to be sooner rather than later.
Mark, obviously you're a Kiwi via Hong Kong, living in London. You are the very personification of a global CEO. I'm looking at Asia, and I'm looking at what Li Keqiang actually said yesterday. He's highly cautious of the shadow banking, online finance risk. How do you look at Asia? How does Asia and China play into your business? And are you as concerned? I mean, you've travelled, you're familiar with the region. How concerned are you? Are you highly cautious on shadow banking in Asia, in China?
Well, Manus, two different questions. And as you know, I lived there for 14 years, so I know the region pretty well. In terms of us, our strategy is a pure disruption play. We're into digital. We did a wonderful deal with Tencent, which, of course, is the largest tech firm in China. And we're looking to really be as disruptive as we possibly can in that market. Shadow banking, Chinese banking system is interesting. If you have a look at the big payment systems, for example, the big payment systems are now Tencent and Alibaba. I think Tencent over Chinese New Year did something like 46 billion payments. which is an extraordinary number. So you are seeing the banking system change. It's not just in shadow banking, but it's all the traditional forms of banking. As to where that's going to come out, we're not sure yet. But what we are sure of is we want to disrupt the insurance industry, which is really quite archaic in its distribution models.